Got a killer business idea? Maybe a tech startup or a cool coffee shop?
But there's a huge catch. You're gonna need money, and usually a mountain of it. So where exactly does that initial cash come from? Let's break down the mechanics.
That's business financing, the entire process of securing funds to start, operate, and scale up. You need this runway for the heavy lifters, essential equipment, top talent, and marketing.
Because without solid funding, even industry-disrupting concepts are just ideas stuck on a whiteboard. To cross that gap, founders generally choose between two main paths: debt and equity.
Let's look at debt financing first. Basically, you're just renting money from a lender. You grab the cash up front like a bank loan and promise to pay it back.
Borrow 100 grand, and boom, you have instant liquidity to accelerate your growth today. The catch? You owe steady payments on that principal plus interest no matter what happens.
It's a strict trade-off. You keep total control, but face relentless payments during a downturn. Now, let's switch to equity financing. Instead of borrowing, you're actually selling ownership slices.
Investors inject capital in exchange for shares. They literally become your partners in the venture. Take a $500,000 check, for example, in exchange for a 10% equity stake. You don't have to repay it, but those investors get a permanent cut of profits. This brilliant move removes cash flow pressure, but the heavy cost is giving up company ownership. Tech unicorns overwhelmingly use equity. So what does a typical funding life cycle actually look like? It scales up, starting with personal savings, then venture capital, all the way to an IPO. This pipeline builds absolute global empires. But honestly, there is no single perfect capital strategy. Your optimal path hinges entirely on your business size, aggressive growth targets, and risk tolerance. Stable businesses often prefer leveraging debt, while hypergrowth startups rely heavily on equity to scale. Ultimately, whether you're a local bakery or massive tech giant, growth demands high-octane fuel, capital. Mastering this explainer shows exactly how raw ideas transform into completely unassailable industry leaders. So, looking back at your own big idea, when it's time to scale, who pays?